All right, guys, welcome to today's Benzinga Trading School workshop. Really pumped to be here. It's a great day. Great to be here with you guys as always. We're going to have Mr. Putrino here in a couple of minutes. He's behind the scenes getting ready. In the meantime, go ahead and let us know where you're tuning in from. Let us know what part of the world you are checking Benzinga out today. Let's see what we can get today.
Today is extra special because Rodrigo's got a haircut and shaved his beard. So he's looking extra fresh for today, eh, Rodrigo?
Yeah, actually what happened was that I was just trying to trim my beard a little bit, and then the machine just died, and I had to rush to a barbershop, and new look, right? So
You look suave, Rodrigo, so
yeah, I look like a totally different person. But today's going to be a great session, Harvey. I know that Mark has been working on a lot of things in the trading school, and I've heard from students as well that, some pretty nice trades have been forming up, a lot of learning, education. That's really the drive here, right? Helping retail traders become a better trader. We got one person from New York. Okay.
let's go, guys. Drop in where you're from. Let's get our fingers warm. We want to make this interactive as possible. We answer your questions. You got to type in the chat where you're from, where you're tuning in from, how excited you are. I'm very excited for today.
All right, let's go. Fort Worth, DMV. I didn't know that was a place. The DMV. Venezuela, New York City. Central Coast, Cali. What up, Cali? Bama. Fort Lauderdale. Georgia, Toronto, California, Georgia. A lot of Georgians here. Cool stuff. So we're definitely going to be starting here in about 5-6 minutes. We'll be getting started, guys. Let's see, Jacksonville, Chicago. Okay, all right, cool. So you guys are definitely all spread out. So let me know right now, what tickers are you guys looking at? I just want to know, I get a feel of what you guys are trading today, what you've been trading this week. What are the tickers in y'all's mind? Tesla for sure. Bullish on Tesla. Bullish on Google. Staff, never heard of that one, Marianne. Let me know what that is. BBBY, Holden, always. Palantir. Yep, I'm bullish Palantir. Not so much Sophie, but still, Sophie's a monster. Splunk, bullish as well. Oh, yeah. Oh, yeah. IonQ as well. Yep, I have that one, Robert. I'm going to be putting that one in my portfolio too. Very interesting company. Ronaldo, Any with that crypto mining company. Okay, I looked into Any as well. Nvidia, of course, can't forget about that. Lucid, I'm on that as well. Nice. Roblox, I'm in Roblox as well. Amazon HD, cost low. Yep, that's a pretty safe basket you got there, Mike. Yeah, I mean, Amazon is still a monster, but the chart has just been like flat. So I love Costco. I love Lowe. I have Lowe's and Home Depot. I don't think I have Costco. AMC, we got some apes in the house today, which is pretty cool. Pretty regular as well. We're the face of retail. Remember, we are retail. Let's see. Seago. Yep, I'm trying to get into Seago. I'm gonna get a good entry on that one. All right, we've gone over a lot of tickers, guys. So let's go apes, Tanya. So now tell me, what do you think right now is what is moving the markets the most? Like, do you think we're talking about inflation? Do you still think it's an inflation? Do you think right now it's our rates? Is it tapering? Do you think the supply chain is still an issue? What's on y'all's mind? We want to know what you guys are thinking about and making your calls from. Tanya says supply chain. Yep, seems like it might be an issue for some time, Tanya. I agree. 2 supply chains, 3 supply chains. Okay. Yep, Ford's good. Ford is good. Yep. Inflation, hyperinflation. Geez. Tech. Yeah, Patricia, tech is like, it's got the Midas touch, as they say. So I think more than half of my portfolio is tech growth. You have to have tech. You need to be tech. You need to have technology, of course. All right, Todd. Cool stuff. Cool stuff. All right, it's cool to see a lot of you guys are in different stocks. I like a lot of them. Yep, Greg, trying to stay bullish, right? So let's do this, guys. We're going to be starting here in about a minute. And I don't know if maybe Mark can go ahead and just take over the chart here really quick.
Hey, Rodrigo, what's going on, dude?
What's going on? How you doing, Mr. Mark?
I'm doing pretty good. How are you?
I'm doing good. Doing good. How was school today? How are the classes?
It's good. It's good. It's good. I have to say I'm surprised a little bit and kind of proud at about how long so many of the students have come. People that have been there since the beginning. So people are really starting to pick it up. So it went well, and we've had a bunch of trade ideas that have worked out. The only one that didn't work out was Bristol Myers.
All right, wake
well, just to
up,
make
guys.
sure everyone is awake and ready to learn. So.
All right, I was about to go get my guns and canned water and head to the woods, man.
Mark, if you want to share your screen there. And
all right, so this is going to stop your screen, right?
Yep, no problem.
Guys, and I also want to mention, please make sure to be interactive, engage in the conversation. The more that you guys actually engage and participate, the more that we can engage back with you in general, and the more value you will get out of this session. So ask questions, be interactive, engage, and let's get right to it. Mark, what's going on there?
All right. I'm just going to go turn down the volume on my television. I'm sorry. I forgot to do that. I probably shouldn't have TV anymore anyway. My grandfather used to call it the idiot box, and he was right. And back then they only had 3 channels. Now they have dozens. So, all right, everybody. So thanks for coming in and checking it out. My name is Mark, and I am the lead educator and a market technician I'm the lead educator at the Benzinga Trading School, and the school is to teach people that are new or even people that are intermediate and advanced ways to improve their trading, and more importantly, ways to understand the market. It's not a situation where we have like some super secret formula that's going to guarantee results, or some sophisticated system. But my background is in the institutional trading world, right? I spent 20, 25 years there, and I was fortunate enough that I was able to work for two of the best money managers probably in the history of the industry. Steve Cohen, who is, everyone kind of knows from allegedly the show Billions is based upon him, but before that he was one of the greatest traders probably in history, frankly. And then Mario Gabelli, who hired me out of business school, I worked for. So I've like literally traded, not shoulder to shoulder, but we were, maybe a couple rows apart from each other, but I've literally traded for two of the best portfolio managers on the street. And then after that, I was a head trader at three different funds, which each were about a 5-year period. But for various reasons, I decided to leave. But so
How
then,
long have you been
about
a
5 or 6
CFT?
years ago, I decided to, the industry really changed, right? It became very computerized and it wasn't fun anymore. So I decided to go into education because I see all this stuff that like really bothers me sometimes, when people like I was just talking about, like, oh, pay whatever $5,000 and you'll have, we'll show you how to turn $100 into $1 million in a few weeks. I can double your money, do this really sophisticated esoteric technique. As someone who's really been in the institutional world, I can tell you that, that stuff, there is no great, perfect system that works all the time. The people that are successful, or the traders that are successful, are the ones who pay attention to the fundamentals and the basics and keep it simple. So what do we do in our class? Well, we focus on what levels are important. We focus on what the trend is. We focus on if something is overbought or oversold.
Mark,
So,
really quick here. What is, you've been a CMT as well for about 20 plus years, right? A chartered market technician, like a market analyst on the charts, right?
yeah, chartered market technician. It's kind of like a CFA, which is a chartered financial analyst, which is more about learning company balance sheets. And,
Right.
The CMT is chartered market technician. It's more about understanding all the things in the market, like how, this indicator, that indicator. So it's a study of the markets as opposed to a study directly of the companies. So yeah, I've been a CMT for about 20 years, man. Boy, time goes by fast. So we do these simple things, and I want to show you a trade that we just wrapped up. And I'm showing this. It worked out like pretty much exactly as we thought. So they don't all work out this well, but this is a good example. And so this Twilio, one of the students pointed out, and this is all, this is all like in the pre-recorded classes. So you can, you can see that I'm not just like lying or whatever. So anyway, so one of the students pointed this out. And one of the things that we look at is when a stock makes a big move, do we see a capitulation? What I mean by that is, do all the investors throw in the towel and just say, you know what, I'm out of here. I don't care what price I get. I just want to get out of my position. So what I'm showing you here is the stock price of Twilio, TWLO. And you see, Rodrigo, this is like one of the reasons why it's great to have this class, because
Right.
I didn't see this. One of the students pointed it out, just thinking about the principles that, yeah, is that how you say it? Just thinking about the principles that we talk about. One of the students noticed this. So we talk about which levels are important, which trends are important. So one of the students said, what do you think of this? And one of the things we teach is that if a stock is really oversold, meaning the sellers have really just crushed it and hammered it and just kind of thrown the baby out with the bathwater, so to speak. Like, for example, this is how this works, right? You have some traders, they're trying to like get a better price. They're trying to be cute. They hope it goes up a little so they can sell for a little bit more. Finally, they just say, you know what, the hell with this. I just want out. I'm sick of it. So they tell their brokers, just like, just finish the rest of my order. And as a result, you get these big volume spikes. This is what we would call a capitulation, right? The sellers they gave up. They threw in the towel. Stock went from there to there. And, this is a stock that trades, roughly, I don't know, 2 million shares on a given day. On this day, it traded 21 million shares. So that's one of the things we looked at that told us, well, gee, maybe there's something going on here. Another thing we looked at, and I think this is where the student first saw it, was, well, levels that were support previously or in the past can become support levels again. The support level is a level where basically there's more buyers than sellers. There's enough demand to absorb all the shares the sellers are selling. And a lot of times markets bounce off of support levels. So we saw back here right around when the stock got to 280, there was support. And when it fell this time, it stopped at the same level. Now, I'm not surprised because they say markets have memories. And this is what we mean by markets having a memory. So the fact that it was a huge volume, it got down to where it had found support before, and it was also oversold.
This was from the trading, from the chat room inside the trading school, correct?
Yeah, well, we talked about it in the lesson, and I put it in the Mark's Ideas chat. It was last Friday, so we closed it out yesterday.
Okay, so that's the thing, like, and that's what I was getting the feedback from, that during the sessions, during the classes, you're actually going over actionable trades on triggers and analysis, which is pretty cool, actually. To be
I mean, that's yeah, like we apply this to real time, and I think that's a really that's a good thing about this class, because there's a lot of market gurus out there, that are like, look like geniuses on in their marketing stuff, because they're only showing you the things that went well, right? They're not showing you the things that went bad. So I like when Neil and I and you all talked about the idea behind the school, it's like, we don't want to have what everyone else has, pre-recorded videos. We want to have what's actually going on in the real market. And, I'm not perfect. And this isn't about like me giving trade ideas. This is about teaching the students how to come up with their own ideas. So this Twillo is a perfect example. One of the students said, hey, Mark, let's take a look at this. It's oversold. Now you see this Bollinger Band? That's a term you might hear a lot. But what it means is every stock has momentum. They have like an average trading range. What would be their typical trading range? If something really gets hit and crushed and it's well below that, it's called oversold. And the opposite is true if it's on the top, it's overbought. So why is that important? Well, it's important because traders see stocks that are oversold and they expect a reversion to the mean, because the vast majority of times when something is overbought or oversold, it will revert. It will go back to what the average is. If it's oversold, it'll rally. And if it's overbought, it'll sell off. So that's what happens the vast majority of times. And a lot of the computerized trading algorithms are all based on that. So anyway, excuse me, we have a stock that was oversold. We have this big sell-off. We have this huge capitulation volume. It was at a level that was support before. And you see how it's below this lower Bollinger Band? Bollinger Band is 2 standard deviations below the 20-day moving average. This is a really common indicator. It's in Benzinga Pro. It's really, it really it does a good job when helping us make decisions to buy or sell. It's not, perfect. No one indicator is perfect, but we kind of put this all together. So we see here, well, we have this huge volume. That could be capitulation. We've reached support. That could be the bottom. We're oversold. The stock is below, it's exceeded 2 standard deviations below its recent average. So that attracts buyers into the market. And sure enough, we started buying it here around 290. Today it's about 313. So some of the students bought calls and, did really well. Some of them just bought the regular stock.
Yeah,
But
that's the other good thing, that even option traders benefit from the lessons, obviously, because they're risking 100% of the trade comparing to somebody who's buying the stock, right?
yeah. And I'm not here trying to say like, oh, look at me, I'm so great, we got this trade. What I'm trying to do is demonstrate that, and there's a lot of other examples, that just by looking at these simple things that the institutional traders look at, that people like me look at for 20 years, we're not looking at all these crazy esoteric things. We're looking at what levels are important. All right, well, for whatever reason on this stock, I've been calling it Twillo, but apparently I've been saying it wrong, Twilio. Sorry about that. For some reason, the $280 level is important. For some reason, we may never know why, a lot of buyers just come out of the woodwork and they buy the stock when it gets to 280. So what do we have? We have an important level. That's our second class. The first class is introduction to philosophy, but the second class is we just talk about price levels. What levels are important? Why some levels are more important than others? Why levels can convert back and forth between support and resistance. But anyway, so here we see a stock that has reached a level that was important. These one of the other lessons, right, our fourth lesson, is momentum. The stock was very oversold, like I just talked about, below the lower Bollinger Band. We talk about capitulation volumes in our patterns lesson, which is the fifth lesson. So we have these three things going for us, right? That's what put it on our radar screen. That's why we wanted to buy it. Simple, common sense things. Now, this is where we picked our sell target, and it got to it yesterday, and I told everyone they should sell, and everyone closed out, as far as I know, at least. Why did I pick this level? We're going to just call it 312.30. It's never this precise, or it's usually not this precise. We're looking at ranges. So don't get caught up with like pennies and nickels and dimes. Look for a range. I mean, this is a stock that's trading around 320. So, obviously a dime or a quarter isn't going to really mean much. But a lot of times in the markets, levels that were formerly support can become resistance. Okay, that's a fundamental, going back to this whole levels thing. Some levels are more important than others. And we've seen a level that was support in the past can become support again. What can also happen is a level that was important support can become a resistance level. So it's important, but it converts from support to resistance. Now, why does this happen? The traditional reason is because of buyer's remorse, right? A lot of people that bought Twilio here thought they did a great thing when it went higher. They thought they were market gurus. They could beat the hedge fund managers. They're going to buy a Ferrari and retire, blah, 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 blah. But what happens? It goes below their level. And now, and Rodrigo, I would be guarantee that this has happened to a lot of the people that are on this call right now, is they bought something, it went up, they didn't take their profit, and it went down, so they're underwater. So what do these investors do? They tell themselves, well, I want to get out of this thing. I don't like it anymore, but I don't want to lose any money. So they place their sell orders at the same level that they have their buy orders. And if there's enough of these sell orders, the level converts into a resistance level. There's enough shares for sale that it will put a top on the price. So we have a real simple thing here. I told you why we thought this was the thing we should buy. I told you why we thought we should have this target price here. And, this just happened to work out. And we had some other things that worked out too. But I just want the people out there listening that, we teach like basic, fundamental, common sense, keep it simple stuff that everyone can, people can understand. Like when I'm in the institutional trading world and I have an order, like sell 1 million shares, and a stock only is traded, 30,000 shares that day, I don't really care about, GAN theory or LE wave. I care about, well, dude, where can I sell the stock? Where are their buyers? What is the level where the buyers come alive? So we keep it simple. We stick with the fundamentals. We focus a lot on risk management and investment psychology. And we can see investment psychology right here. What is investment psychology? It's something that makes people do irrational things. Well, the psychology of what I should say, the psychology of unsuccessful investors makes people do things that make them make mistakes. So look at this stock here, right? This Twilio. So people that bought it here, it went up and now all of a sudden they're in love with it. It's like they just started dating someone new or something, It's like, oh, we had a great first date, but this is really going to work out, blah, 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 blah. So you get up here, what happens? It starts going lower. Well, it's like, all right, well, your first 3 or 4 dates were good. Well, now you have a bad date, right? The person you're dating keeps getting cell phone calls from their ex. They keep getting up and going into the bathroom to like talk to them. So now you have a bad date. So you should get out, right? If you're in a restaurant, you should just like leave and take off. But you're kind of hoping for things to go back to their past glory. This is an emotion we can call sentimentality. People get attached to things. So if whoever bought it down here had a good exit strategy, it would have told them to get out up here somehow. They wouldn't have necessarily gotten the highest price, but they might have a strategy that says, all right, well, if this thing breaks its uptrend, or if there's a little reversal pattern, I'm going to sell it. The people that held on to it, now all of a sudden it goes lower. So what do we have? We have buyer's remorse. All these people that bought regret buying it, and they want to get out of it. They don't want to lose money, so they put their sell orders at the same price that they paid for it. And because of that, you have this resistance level here. So it's important to understand that when we look at charts, we aren't looking at things that are mystical. We're not reading tea leaves. We're looking at graphical illustrations of the supply and demand dynamics that are occurring in a market. And if you know what they are, you can profit from it. I like to use the analogy of a medieval market, right? Think like, we're medieval Europe, whatever, in the year 900. And there's like one market where all the farmers have come from all around and all the people come from all around to go buy and trade or whatever. So, they have like an apple vendor, a pumpkin guy, a wheat person. So, all the people come in, they buy their commodities. Now, just say there's one way into town, right? The only way all these supply wagons can come into town to bring the goods and the people is this one road. Well, now say you're a merchant, or you don't even need to be a merchant. You could just be a trader. Say you go up into the mountains and you have a telescope, well, which you probably wouldn't, because I don't think that was invented until Galileo came up with it like 300 years later. But just suppose you had really good eyes and you saw, well, typically we get, every time we do this, we get 12 carts carrying pumpkins, but today there's only one. So what does it tell you? Oh, well, there's going to be a shortage of pumpkins. So that merchant or that spy or that trader goes back into town, kind of slowly goes around and buys up all the pumpkins without letting anyone know. Now, when all of a sudden the buyers come in, the people that want to buy pumpkins, they have to pay higher prices because there's no pumpkins around. The increased demand with limited supply makes the price go higher. So now the trader who went out and purchased all the pumpkins can turn around and sell them at a higher level and make money. And, that's an analogy, but that's really kind of what we're looking to do here. As traders, we're looking for stocks that are out of equilibrium, things that are ready to move. In the example I just gave, well, the pumpkin market was ready to move. Okay. There was going to be a dislocation in the equilibrium. Had it been a normal amount of pumpkins coming in, well, probably pumpkin prices would have been unchanged. So that's what we do. We keep it simple. We focus on supply and demand dynamics. A lot of people think like, oh, trading's really complicated. It doesn't need to be. Yes, it can be, but it doesn't need to be if you do it right.
Yeah, and there's a lot, and there's a couple of people commenting that they're very new and all that stuff. So I mean, that's the typical student, you could say, Mark, where they're learning, they're starting, they want that guidance from somebody to help them. And besides these, Reddit, Wall Street Bets forums and stuff.
Yeah, well, they came to the right place. And frankly, students that are new are easier to teach than students that have been doing it for a long time because they don't need to unlearn anything. So, we like teaching new students, and a lot of the students that are a little bit more advanced reach out and they help the students that are newer. So we seem to be developing a really good community. But yeah, I
Mhm.
mean, if the only prerequisite for this class is that you need to want to learn and not to be told what to do, right? If you want like your daily trade recommendation, this isn't the place to come. If you want to learn how to look at the markets to come up with your own daily trade recommendations, that's what I'm here to do. The thing about trading is this: you have to trade a style that fits your personality. If someone says, I'm going to teach you my system and it'll make you rich, well, that's like Tiger Woods saying, I'm going to teach you how to play golf like I do. I mean, it's just not going to happen. He has a different personality. So some of our students are, active day traders. They're in and out of positions 10, 20 times a day. Some of our students are people that buy or rebalance their portfolio once or twice a year. Some of our students are just people that just want to learn about the markets. So yeah, all are welcomed. The only all right, actually, I have another prerequisite because someone in the chat is, I'm not going to tell you, but one of the students always tries to stump me. Seems like they always ask me a question that like they don't know if I could figure it out or not. But anyway, so the true prerequisites is you want to learn, you don't want, you're not coming in for your daily trade idea of the day. You're coming in to learn something, and just don't try to make me look bad in the chat unless I deserve to look bad.
Yeah, the trades, I mean, the trades are there. I mean, you've been doing this for decades, so it comes natural. I know a lot of people come like, give me trades. But that is part of the education, right? Because we're doing educated trades here.
Yeah, exactly. I mean, it's not like what we do is we go through things together as a class and we look for things together. I mean, this Twilio is a perfect example. I was talking about, stocks that sell off, that have big volumes, that could be a signal of a capitulation. One of the students said, hey, Mark, why don't you take a look at Twilio? So we looked at it,
Yeah.
and we came up with a trade idea, and based on common sense and fundamentals. So it isn't just me saying like, oh, do this, do that. A lot of it is students saying like, hey, what do you think of this, what do you think of that? So yeah, there's a lot of ideas. People are going to get ideas. I just don't want them to come in thinking where it's like me saying, all right, buy XYZ at this price, sell it at that price. We don't do that.
Yeah,
This
it's
is a
more than that.
school.
Yeah, it's more than that. And so what is the deal with oil? I know that you've been following oil ever since the bounce. Obviously, all the OG students got in there, including myself. Where do you see oil now? I've heard $100 thrown around here and there. What should we do with oil? Because I know a lot of students are still holding all the gains that they've made either from Chevron or from all these other oil plays when you call that bottom there.
Well, here's the thing: markets don't go straight up, right? And people get impatient. A lot of commodities are traded mostly by just traders as opposed to long-term supply and demand. The vast majority of the currency trading is, 80 to 90% is just people trading just for trading. It's not people saying like, I got to exchange my dollars for whatever because I'm going somewhere. It's the same thing in the commodities markets. The vast majority of the trading is just people that are trading. It's not like, a big company that needs oil hedging. So we've had this big move up in oil. And we talked about this in the, we talked about this in the class. And I think what you're referring to is we had this boot camp back here, right? It was a Saturday. I remember it was really hot. And we had been in a big sell-off here. And I talked about why it was probably a good time to buy. So I'm going to bring up what we call the relative strength index. It's a momentum indicator. Momentum is a measure of how far a stock has moved in a given period of time. In this example, you see where it says 14? This is just a very common indicator. It's called the RSI indicator. It's in BZ Pro. It's in pretty much every every charting software you'll probably look at. So what it does is it measures how far something has moved, and if it gets to an extreme, it indicates that it's oversold. It's like the same thing we just talked about with the Bollinger Bands and the standard deviations. This is just a different way of measuring momentum. So what's one of the fundamentals or principles of our class? Things that are oversold that get to support tend to rally. And I mean, you could even write that down. And even if you don't join our class, you'll be thanking me for those simple words of wisdom, because it's really simple, basic thing. Oversold markets that get to support tend to bounce. So what do we have here? We have oil. It's getting sold off. It's going lower. What happens? Well, it gets down to around $62 a barrel. $62 a barrel was support back here. So it was oversold. It got to support. We said, all right, well, we should buy oil. We should buy oil stocks. And it turned out that it was, a really good call. And sorry, that's my dog barking in the background. I don't know if you can hear him or not, but anyway, like there's nothing ultra complicated going on here. I'm not using really complicated fractal math or this or that or the other thing, or talking about things that you can't see. It's just pretty simple. We got oversold. In other words, the traders kind of threw in the towel. Excuse my disgusting term, but on Wall Street, we'd be like, oh, we'll just go puke it out. And it got overdone. And what happens when something gets oversold? Well, it rallies back. Why? There's a logical reason for this. The sellers got so aggressive, they sold all their futures. And well, this is oil, so these are future contracts, but forget that. Just say the oil traders sold all their oil. Everyone who was willing to sell, they're like, all right, let's just sell. Let's just get done. So now when people come back into the market and they want to buy, there are no sellers at their current levels. Like someone could come in and say, well, oil's trading around $64 a barrel. Hey, I'll pay $64 a barrel for 100 barrels. If someone wants to sell it to me. Well, guess what? There's no one who's willing to sell that low. All the sellers have done. Well, now it gets up to 65. You say, all right, well, I'll pay 100, I'll pay 65 for 100 barrels of oil. Well, there's no one to sell it to you. So now you have to bid a higher price. Well, I'll pay 68 for barrels of oil. Now, finally, guess what? That brings sellers into the market, and you could finally get your trade in. So when you see these big sell-offs, right, and when something gets oversold, you have to, again, these are not, we're not playing chess here. We're playing like educated poker. When the sellers get washed out, there's a dearth of supply or a lack of supply. So buyers need to bid higher prices. And that, by definition, is what drives a market higher. That's the definition of a rally, is that buyers have to pay higher prices because no one's willing to sell it to them at current prices. So,
right. And Patricia is showing a good comment here from Patricia. Basically, Patricia is just giving an overview of what you're doing here, saying he's showing you how you can apply these principles to stocks you're following. He's teaching you to fish, not just giving you the fish, which is what a lot of new traders are just, typically looking for. Eventually, they don't find out that like really the value is in the education of understanding the trades, not just give me a trade and that's it. Does that make sense? Like we're trying to do something bigger here than just give out a trade. But we've gotten a lot of questions about this trading school. So I'm just going to show you guys the platform really quick, Mark.
Yeah, cool. Go ahead.
Okay. So can you see that, Mark, right there?
I can.
Okay. So this is the trading school, right? This is the homepage. Try to make it a little larger there for you guys to see. So these are all the classes that are saved in case you missed it. So these are all the prior classes that are recorded: investment strategy and trading systems, market principles, analysis, sentiment, investment psychology. This is my favorite one. It's the class from November 2nd. Chart patterns, momentum, Q&A sessions are recorded as well and uploaded, as well as the office hours. So we do have office hours if any of you guys need additional like attention or have specific questions. The class for momentum is right here. So that is the homepage. As you can see, the dates are separated. If we would have a class right now, this is where students go. They just click on live class, and you'll be able to live stream here the class with Mark and with the chat as well. So people are able to chat as we are going through the education. Obviously, this is for actual members. The chat rooms here is where you can get all of the chat rooms for trading. Okay. Any office hours that have to be scheduled as well there. There's another chat for Mark's trade ideas. As you can see, full on chart entries.
Oh, you can, you know what? You can scroll back and show them that Twilio, so people believe that.
Which one? Let's see. How far up is it?
It was it was Friday.
Twilio right there. Okay.
Yeah.
This is the one you sent out to the students. All right. Oh, so
this
is
what we just talked about. So you could see like what we were looking at then.
So people are asking here, give me trades, give me trades. Well, this is what we're doing in the school. This was a huge winner on calls, huge winner. Yep. So you laid it out everything there, Mark, pretty much. Okay. So these are some of the trades that Mark is giving out, and he's always putting out detailed notes and, you know, being specific when it comes to these trades. And you also have the video library. Right here is where you're going to find all of the recordings from all of the classes if you want to catch up. These are the prior classes that have been recorded. As you can see, you can scroll down until, you know, the first class began. And you also get Benzinga Pro included with the trading school. And that is this platform that I'm showing you right now. As you can see, this is Benzinga Pro. This is where you can create customized alerts, do research on any stock that you're looking at, find fundamentals, find peer comparison, full-on calendar with analyst ratings, conference calls, dividends, earnings, economic numbers, FDA approvals, guidance, IPOs, M&As, retail sales, SEC filings. You have this new tool, it's called Insiders. So basically, it gives you the companies that most officers in a company are buying. So if you have the VP buying, the director buying, the VP of sales buying, you know, like a lot of people in the actual company, buying the stock, it will be pretty much highlighted here. Then you have a separate one, and it's highlighted by size. It tells you the percentage they own and all that. Gives you the insider purchases. So if an individual is buying a lot of stocks, also there's one for penny stocks, which I know a lot of you guys like. So this is, you know, just a little touch. And this is the only scanner that you have that is scanning pre-market, starting at 4 a.m. all the way up to 8 p.m. This is the only scanner that aggregates data during pre-market and aftermarket. All the other ones are basically just during regular trading hours. And with this tool, you will be able to generate hundreds of amazing trade ideas that are customized to what you want. And this is just a little bit, but I want to get back here to the education. Mark, maybe you can go ahead and take back the screen. And I'll post the link here in the chat as well, guys.
Okay. All right, you see that?
Yep, you're all set.
All right, cool. All right, well, the first thing before we start looking at more things here, I just want to talk about the class structure, right? We have 8 classes, and generally they go Monday through Thursday, and then on Friday our morning class is more just a discussion where we talk about what we talked about during the week. But it's not in this school, it's not that you take the 8 classes and it's over. You take the 8 classes go on, and then they recycle and they come back again. So like, for instance, I said, lesson or second lessons, we talk about levels. Well, we'll discuss the fundamentals of why a certain level is important. And we're going to look at some charts with some really good ideas, really clear examples. But then in the second part of the lesson, and then in the 12 o'clock lesson that we have, we're going to actually look for important levels in the market. Like, we're not using a book, because in a book, everyone is 20/20. Everyone has 20/20 hindsight. So the first part of the class, we discussed the fundamentals, right? We have our levels class, we have our momentum class, we have our trends class, we have our investment psychology class, we have our patterns class. So the first part is we discuss the fundamentals of whatever we just, whatever I just referred to. But then we look for examples in the actual markets. So it's a rotating thing. I don't know. Now, rotating is another word, like a recycling thing. You take class 1 through 8. It's not like you're done. Class 1 starts again, but the fundamentals don't change, but the markets do. So that's, some people get confused about that. So I just want to make sure that's out there.
Yeah, basically the market from last year, from 2020, is not the same year from now. And that's why all the retail traders from 2020 are washed out pretty much. And I have a new cohort of new traders, and back and forth pretty much. So the market changes. And that's why you, as a retail trader, you want to be able to be trading with the current trends.
Yeah. And I guess people want to know, like whatever, want to give me, a trade idea. Well, this is a trade idea that I can give. I mean, I think, this isn't like, you're not going to retire tomorrow on it, but this is something we talked about in class, and it's also on the thing that Rodrigo just showed you. So what do we talk about? Well, we talk about important levels. So this is Stanley Black & Decker. I guess I'm old enough to remember when it was Stanley Works and Black & Decker were two different companies. But anyway, what's an important level? Well, I'm going to put this line in right here at 175. Now, look at this, right? You don't need to be a market guru to see this. It's a 5-year chart. And remember what I said, some levels are more important than others. For some reason, the $175 level is really important for this stock. After a huge run up, they ran into it in January and February of 2018. Crashed into a wall of sellers, started going down, went back up there. 2 years later, in January of 20, what happens? Resistance again. Then it finally breaks above it, and what happens? It becomes support. Now, this is a little different than we looked at before. We talked about buyer's remorse. This is seller's remorse. People sell, it goes down, and when it goes higher, they say, man, I shouldn't have sold it. I want to buy it back. So they place their buy orders where they had their sell orders. And if there's enough of them, it creates support. So that's what happened. So this is another example where a student said, hey, let's take a look at this chart. Stanley Black & Decker. I think it's reached an important level. This 175 level looks important. What do you think? Well, we have a level in a really kind of conservative, old kind of school company. They're making hammers and screwdrivers. They're not putting out software, at least as far as I know. So this is a 5-year chart. You can see up here, this W means weeks. I'm going to just bring it up to the year-to-date chart. So now each of these rectangles is a day. In the chart we were just at, each of these rectangles is a week, these horizontal rectangles. So one of the students brought this up, and you could see it in the same thing that Rodrigo just showed you. I think it could have been this day. It could have been November 1st. So today's the 4th. Yeah, it could have been Monday. I mean, I'm sorry. I look at so many charts, everything just kind of blend together. That's why we keep a track record of it in that chat that Rodrigo just showed you. But anyway, so one of the students said, hey, Mark, it looks like this thing has gotten to an important level. And sure enough, it bounced off of it. But I think there's still some more room to run. Another thing we look at in our class a lot is trends. We have a trends lesson right after patterns. Right after levels. I put levels as the first lesson. The first lesson is Introduction to Philosophy. Technically, number 2 is levels, but it's really kind of the first lesson. So trends, what does a trend line show? Well, when markets are heading lower, the bears are in charge. You kind of see these red rectangles, right, are down days. The top of the rectangle is where the stock opened. The bottom is where it closed. So if it's a down day, we get these red rectangles. If it's an up day, we get blue rectangles. In this case, it's the opposite. The bottom of the rectangle is where the stock opened. The top is where it closed. So anyway, so we can see all these red rectangles, shows us the bears are in control. Finally, we get down to a support level, and it looks like the bulls have kind of come out of the woodwork. There's enough buy orders there, enough buy interest to absorb or take in all the shares that the sellers have for sale, and the downtrend stops. We see a big bounce, right? I mean, from 173 to 190. We got down there again, and now it looks like we're bouncing again. So why do I think this is a good trade, and why did me and the students talk about this as a possible trade idea? Well, we have a stock that went through an important or a big sell-off, and it reached a level that has been important in the past.
So yeah, that's interesting for sure.
Very, it's very simple, Rodrigo. Is like it sold off, the sellers kind of threw in the towel and got overdone with it, and it came to a level where it had been supported in the past. Support means that's the level where the people that are watching the stock say, like, man, this is just getting too cheap. I can't take this anymore. I got to go in there and buy this. And all of a sudden, all the buyers come into the market, and there's enough demand that the sellers can just sell all their shares without knocking the price down lower. And that's what support is. So a lot of times we see rebounds off this, and that's what we're seeing here, rebounds off of support.
What's fun and interesting really is because I attend some of the sessions when I have some time in the morning, when I'm not, trying to make trades in the pre-market, and the chat is active. The chat is lit. They're talking about trades. They're talking about tickers. You're going over the education. It's like all in one. It's like a very tight community. People know each other. They help each other. They give trades to each other. So there's constant trade ideas being thrown around in the chat. And I mean, you pick those as well. And so it seems like a very dynamic environment. Good for learning.
Some of the students are even forming like study groups. I don't know if I would recommend it, but some of the students are putting their phone numbers in the chat, like saying like, oh, call me and if you want to meet for a study group or whatever. But no, it's I want it to be very interactive, and there's a reason for that. I went to business school, like, geez, at this point, it was 25 years ago. Like, I went to NYU business school, and I graduated, and you know what? Here we are 25 later, and I'm being a little bit hyperbolic, but it's like there are two classes I remember, right? And one of them was this class taught by a guy by the name of Larry Zicklin, who was the head person at Neuberger and Berman, which was a big money management firm back then. I don't even know if they're still around. And Larry is probably at this point just a retired philanthropist. He's like a great guy. Gave hundreds of millions of dollars to churches and synagogues and hospitals. But anyway, I had our ethics class with him. It was ethics. We're supposed to talk. We're young students. We're all business majors, getting our MBAs. We're going out to the business world. Let's talk about ethics. And the class was literally, I'm not exaggerating, literally, Larry would come in with a newspaper, because back then people actually still had newspapers, and he'd put it on the desk, and he would say to the 20 or 30 students that were in the class, like, let's form a circle, and all right, well, here's a story. XYZ is taking over ABC. Let's talk about ethics. What could be an ethical thing going on here? Well, if some vice president's family is going bankrupt, and their spouse gets this inside information that this takeover is happening, and then they can go like buy it, to keep their kids from starving. I mean, I'm being hyperbolic, but it was like this open discussion, the brainstorming has stuck with me for 23 or 24 years. And I think that's how you really learn. You don't learn boxing by reading a book on how to box. You don't learn how to play golf by reading a book on how to play golf. You go out there and you play golf. And that's how, I mean,
you learn from people that have been doing it for a long time. Instead of following the YouTubers, the social media accounts, follow somebody who's been doing it for over 20 years with legendary investors like Cohen and Jabelli. That's the person that I would like to learn from. As a trader, I can tell you, don't fall into that trap of following the social media stocks.
Yeah. So the thing about the class is, like, I think the interactivity, if that's even a word, is what really helps people. And I refer to this example because you can see in Rodrigo, behind him in the wall, there is a picture of Muhammad Ali, right? So let's talk about boxing. We could talk about it in anything you do. If you're a tennis player, if you're a golfer, anything. All right, say you're a boxer. You can go and you can lift all the weights you want. You could run as far as you want. You could be like Rocky in Rocky 1, where he chases the chicken around the junkyard there or whatever. And you could think you're in good shape and you could be primed, but until you get into an actual ring and box someone else, you are not going to know what it's really like, right? So I could have written a book and said, look how good I was when I called this signal in, March of 2018. Or I could have said, look how great I was and how much money I made for people in June of 2016. That's what trading books are, and that's what pre-recorded books are. And it's frankly, it's a waste of time. I mean, if had those books and those lessons benefited the people that are listening now, they probably wouldn't be here. So I think you're coming for the right reason. So what we need to do is we need to go over the basics, the fundamentals, right? Let's go back to the boxing example. What's a fundamental of boxing? I mean, I don't know. I'm not a boxer, but let's say, all right, you spend, weeks learning how to hit a left jab, right? Then when you go into the actual ring, you're not thinking like, I'm going to hit a left jab. It's just going to come to you like subconsciously. If you do the fundamentals enough subconsciously, it'll sink into your subconscious and you'll be able to see in the market. Most people don't realize how powerful the subconscious is. It's actually stronger than your conscious mind. Like, what's your subconscious? Well, how can you walk? Like, do you actually get up and think like, well, gee, I'm going to put my right foot in front of my left foot in front of my right foot? Well, maybe when you were 12 months old, you thought that, but it became really ingrained in your subconscious how to walk. If you're running down the road and you fall, you're automatically going to put your arms out in front of you to brace yourself so you don't hit the ground too hard. That's your subconscious. You're not running down the road thinking, oh, if I fall, I'm going to put my arms out there to brace myself. So that's why we have to do this like repetitive focus on the fundamentals, levels, trends, momentum. And then when you go out into the market, you can start to see this stuff kind of subconsciously or consciously. So, that's why what Rodrigo and I are doing is saying, and that's what the class is doing is, we continuously study the fundamentals, but then we kind of, I'm not saying leave behind. That's not a good thing to say, but we continuously study the fundamentals that are always the same. The fundamentals don't change, but the market does. So we're studying the fundamentals that don't change, and then every day we're taking those fundamentals and applying them to the actual market. Like if we go back to this Twilio, this is a really good example. What are some of the fundamentals we talk about? Well, the importance of levels. Well, here we can see two levels that are really important, right? Well, this level was important, 280, because it was support. So when we saw the sell-off, we had an educated idea that there was a good chance it would stop at 280. When the stock rebounded, what else do we see? Well, we have another level at 312. That's important for some reason. So we made an educated, I don't want to use the word guess, but we made an educated analysis, I guess, that suggested the stock would run into resistance around a level here because it was a level that was support. So, fundamentals, like in the morning class, we probably would have been looking at fundamentals of important levels from like longer term pictures. Like I know that, actually, I'm going to go to a more recent example. Like Square is in our presentation for important levels. Oh, you can see that. I still even have the things up there. So in our levels class, we look at important levels, hence the name. And I think the thing I use in class is probably from around here, but what do we see here? Well, for some reason, the $200 level is important. For some reason, the $275 level is important. When it got down to 200, the buyers came into the market and it moved higher. When it got up to 275, the sellers came into the market and it moved lower. So this is the type of thing, like for instance, in class, in our patterns class, which is going to be on less than 5. I don't know. I think it's next Monday. But we're going to look at this and we're going to drill this into our brains, right? Important levels, important levels, important levels, important levels. So then we take that and, the students found this, like we were looking for important levels in real time. We found these 2 important levels in Twilio, and that allowed us to put a profitable trade on. So, it's not rocket science here. It can be rocket science in some funds. They have NASA PhDs doing all this quantitative stuff. But guess what? A lot of those funds go under. It's just because they're more sophisticated doesn't mean there's a guarantee that they're going to have better performance. So that's an example there.
What else is going on in the trading school? A lot of people seem to just want a little bit of information as far as what you're doing there and why they should join and all that stuff.
Well, I mean, they should join because it'll teach them about the markets and teach them how to make money. I guess that's that's the simplest reason is why you should join. So I think the 2 things that we have that are, the 2 things that we offer, I think that most schools don't, or at least none of the ones I've come across is one is, there's me and I'm not like patting myself on the back or anything. It's like, I just have a lot of experience. I've been around the block a bunch of times. I'm not some hot shot that started trading and just got rich on Bitcoin. And now I'm like, riding it or whatever. I mean, frankly, if you've only been trading in the last 10 years, you've never seen a bad market. But the other thing, and the more importantly, is this application to the real markets. And like I said, like some of the students don't even want to trade. They're just trying to learn more about the markets. Maybe they're in business school. And it's, it's simple. We keep it, important fundamentals, levels, trends, momentum. Like one of the things we were looking at today, Rodrigo, was we noticed the financial sector has all of a sudden gotten weak, right? This ETF here is the financial sector. It's XLF. It's the financial spider that follows the financial sector. Like this is where, banks are. This is like an aggregate of banks, insurance companies, brokerages, things that are financially related. So I'm going to put in this level here, which was resistance, but then we broke through. So now what do? Right? Well, we see some weakness in the financial sector. So that kind of tells us, this is one of the ways we get trade ideas. We scan the sectors, and if we see something is unusual going on in the sector, then we look to the stocks that are in the sector for various ideas.
Is it me, Mark, or financials bottomed with oil? It looks somewhat similar to the oil chart.
Yes, I can. I don't think it's a perfect correlation, but I can see why you think that, or why that has happened. Because the general consensus is when interest rates are going higher, financial companies are going to make more money because they can charge higher interest for lending money. When oil is going up, it's an indication that interest rates are probably going up. So if oil is weak, like it has been for the past few days, it could signal that there's not going to be inflation, or there's not, interest rates are not going to go up.
So this goes hand in hand with Powell's recent call where he said he's going to slowly start the tapering, but keep rates near zero. So that might have been the cold bucket of water, probably.
Exactly. Yeah, exactly. Totally, dude. Absolutely. All that being said, though, I think oil, if we go to oil, I think oil is going to rebound and keep going higher. One of the things I want to show the students is we don't just talk about technicals, right? We talk about important things that are going on in the market. And this this indicator came out. This is it's a free website. You might hear about these like PMI reports, purchasing managers index, or whatever. This comes out once a month. So it came out on I think on, was it Monday or Tuesday? So this is one of the things that the students I look at, like, all right, so the question is like, is inflation transitory? Is inflation for real? Is it transitory? Blah, 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 blah. So we don't just guess, we start to look at things, and you don't need to be a really savvy Wall Street person. ismworld.org. It's the institute. It's like a think tank, I guess you would call it, Institute for Supply Management, but it's very respected. So, they talk to people in the industry, and now we're thinking about inflation, right? Is inflation going to keep going higher? Well, whoever they talk to is probably some CEO somewhere said global supply chains continue. Getting anything from China is near impossible. Extreme delays. So these are, big wigs or big shots in the industry talking about things. Strong sales continue. However, we have diverted chips. Customer demand remains high, but supply chain issues are still hampering our ability. So what does that tell you? Well, it tells you these supply chain issues are not even close to being resolved. You don't see anyone here saying, well, we had supply chain issues, but things seem to be getting better. Look at this. And, obviously they're not going to tell you who it is, but these are quotes from people that are CEOs, like people in the know, so to speak. My prediction is that in 2022, we'll see constrained supply, restricted logistics, and rampant inflation. I mean, that's a pretty big thing, right? Labor is still difficult for our suppliers to obtain. I'll give you some anecdotal evidence. I had to bring my truck in today to get serviced. So they gave me a rental car or whatever. That's a different story. But I'm telling you, man, on the ride home, it's almost like every store I passed a Burlington Coat Factory. I passed a couple other places, and they all have signs like, we're hiring. So we have labor is still difficult. Then let's scroll down a little bit more, and this is also interesting. Do you want to know? If you're sitting out there thinking like, well, gee, is inflation transitory, or will inflation keep going higher? Well, let's look at this now. Commodities reported up/down in price or short supply. Look at this. Commodities up in price. I don't even know what some of this stuff is. Phosphates, polyethylene, terephthalate, or whatever. All right, so these are all the commodities that are up in price. You want to see what's down in price? Wood. So you have all these commodities are going up in price, and you have one that's down. You don't need to be a great economist with a PhD to say, well, gee, that seems like inflation's going higher, right? Now you have commodities in short supply. All these other things are in short. So they're going up in price and they're still in short supply. That tells me It's probably going to keep going higher, and we're going to see more inflation. So, I mean, that's just a little bit of a side, Rodrigo. I just wanted to show the students that, or potential students, hope to be soon students, that we're not just looking at charts. We're looking at macro news that might be important. The main focus is technical analysis. Probably 20, or that's probably 90% of it. But we do look at other things too. All right, so that brings us all the way back to this financials. We see the financial sector is weak. So going through the financial stocks today, I saw something that could potentially be a short idea. We looked at Citigroup. And what do we see with Citigroup? Wow, it really had a big sell-off today. When I look at it, like around 1 or 2 o'clock, it wasn't down that much. But anyway, so what do we have here? Citigroup is selling off. You know, could be the whole interest rate thing we just talked about. And look, it's reached a level that was support before. It got down to 67. Now it's back down to 67. So remember what we saw on the prior charts? A level that was support can become support again. Our momentum indicator tells us that it's kind of an oversold range. So, you know, now if you're an options trader, this could be a place where you put on a straddle or a combo. In other words, you don't know which way it's going to go. You just think it's going to break one way or the other. It's either going to rebound off of this level really fast, or it's going to break the support. So by going through the sectors and looking at that the financial sector, what did it do? It let us think, let us brainstorm about interest rates, financials, right? Inflation. And from this, now all of a sudden we've come up with an idea. Citigroup is teetering on important support. Does it rebound or does it break down and sell off? So this is kind of one of the things we do in the class, is that we look at the markets, and from that, we can get trading ideas. And at this point, a lot of the students would be saying, well, you know, what do you think of this bank? What do you think of that bank? Does this chart look better? Is that better? Should we look at this one instead? Like, for instance, today we were talking about credit cards because we were talking about financials. So look at, this is Discover, and someone made a pretty interesting observation that they didn't even realize Discover card existed anymore, and nor did I, but it doesn't matter. Maybe we can make some money off of it instead of them making money off of us, right? So anyway, so what do we see here? Well, stock is sold off to important support. So there's a chance it could break down. But we looked at Visa, which is another credit card, obviously. The chart's not as clear, you know, it's sold off, but the levels aren't as clear. Then we also looked at MasterCard. Same thing, the levels aren't as clear. So we probably wouldn't have talked about trading ideas on, well, actually, I can tell you definitively, we didn't talk about trading ideas on MasterCard or on Visa. But the Discover card, which again, I don't even believe exists anymore. This DFS, this sticks out. Why? Well, it's at an important level. For some reason, 114 is an important level for this stock. So we've sold off and we've gotten down to it. So, you know, I mean, if you all wanted trading ideas out there and you're options traders, I mean, no, this could be a good place to put on a straddle or a combo. I would think over the next week, it's going to break one way or the other. So that's just an example of, in the trading school, how we apply our fundamentals to the real world in real time.
Yeah. So there was a question there. The classes are Monday to Friday. So from 7 a.m. to 7:45, you have the lecture. From 7:45 to 9, it's the lecture review. and you have a break. Then you meet again at 12. This is all Eastern time. And then at 12, you have the open market discussion. And all throughout this entire time, we're talking about trade ideas, strategies, and market events as well. So it's basically a full on community where not only you can go there and learn how to trade, but actually talk to other traders, verified real traders, not, these pump and dump stocks, like you know which ones I'm talking about. But basically this does give you that advantage, right? If you're starting, when I started, there was nothing like this. And I had to learn through taking hits in my account. And you don't want to learn that way. If you have a choice, you would want to learn, get the education before you start putting in cash, because the calls that I get of people that have lost 400, $200,000, and they never have had any prior real serious education in trading. So do yourself a favor, do your account a favor, do your wallet a favor, and get the education, because if you don't do it, eventually you're going to end up learning by blowing up your account. And you can only take so many of those hits, right?
Yeah, we don't want, blow up is not a word we like to use in our class, and hopefully we never will have to.
Yeah, absolutely. And I take the trades as well, and that's what they are, trades, right? We're not falling in love with stocks. That's part of the investment psychology class that Mark teaches. Everything falls together and fits together. But really, who can give you 25, 30 years of experience in the markets in 1 hour? So we try to sum it up here, obviously, but this does go way more in detail for actual trading school members, Mark, right?
Yeah, definitely, man. There's no doubt about it. Like, we talk about investment psychology and how do we see, people are susceptible to this like herd mentality, and it makes us it makes our emotions take over. We do dumb things. How can you see this in everyday life? Well, how many times have you have been driving and you pull up to a toll booth where there's traffic, and there's all these people are in one line trying to go into the one booth, but if you just go around it, you can see there's a booth up there with a green light, and you can just kind of go flying through it, and then people start following you. That seems like a kind of a silly example, but by having the ability to say, man, I'm not going to follow the herd, maybe I don't need to get on this line, and looking ahead, guess what? You just save yourself 20 minutes in your trip to wherever you're going. So we see these things every day, these psychological things that make people do things in the market. And now that you're going to learn about it, you can learn how to make it help you make money instead of lose money.
Right. And that's the goal, right? Everybody wants to get in to make money, and they find out it's not that easy, and they end up losing a lot of money. Then they revenge trade. And then the psychology of it just kills you, it wears you down. So
well, I don't think I've ever heard that term before, revenge trade. Did you just say that?
Yeah, there's a lot of revenge trading.
So that's when you get mad and you just throw something out there hoping it works.
You start getting more aggressive with your plays, because now you have that. Now you think of yourself as a smaller self because you lost so much, and you want to go back to where you were. So basically you're taking gambles that you wouldn't normally would, just because you want to get back to where you were. But yeah, there's also a lot of vacuum trading, when you're doing this on your own, not with a community, which is what matters the most. Trading with a community that has your back, right? Benzinga is for retail traders. So we enjoy giving you guys, this experience. It's very good for people that are starting, even for people that have been doing this for a while. And
yeah, Rodrigo, that's a good, I think that's a good thing to just bring up, because sometimes if I'm given the lessons, I get, I can't pay as much attention as I need to all the various stuff that's going on in the chat room. But there's been a couple examples now where I think someone wanted to revenge trade, as you said it so eloquently. Like someone lost money and, they're upset with themselves, and they just, they're like, does anyone else have a trade for me? Blah, 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 blah. And the students say, listen, when you're in this position, when you're ready to revenge trade, that's the time to take a break. Don't trade anything, go for a walk, go for a ride, whatever you do. You don't always need to be in the market. And what I've seen is this kind of student collaboration or support, where someone will voice an opinion, whatever, I'm really bummed out, blah, 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 blah. and a lot of the other students will support them. So, that's a dynamic that I see going on there. So I think that's pretty cool.
Yeah, Cypher here. Shout out to Cypher. He's a true warrior. Cypher, Cypher. He put a comment here on the YouTube. I am in the Benzinga school and it's already paid off. Twilio paid for the class. Twilio paid for the class, Mark. All right. So people wondering why we're looking at Twilio, why we're going over this trade.
I think Cypher, you still in that? I've got to go through Rodrigo, but are you still in FedEx? That seemed to kind of take off.
He's in the YouTube. So
oh wow, look at FedEx.
Cypher, are you still in FedEx? Let us know. We're looking at it now for you, okay?
Wow. See, we thought about this FedEx as a trade.
Yes, you put this one in the trading in the. I remember. I mean, I've been long on it for a while, but I remember that you had brought up this FedEx and UPS trade several times for members.
Yeah, and let's just recap this one, because again, this just shows you how what we do is simple. It's not that complicated. So we see FedEx, really got crushed. It got really oversold. It started coming back up and it ran into this 235 level. Okay. Now, remember what we talked about. Certain levels are more important than others. So we thought, well, this level was support. So there's a good chance it's going to be resistance. So on this day here, this is where I put out my FedEx buy recommendation or buy guidance. So my thought was, all right, well, we finally broke this resistance. There's a good chance it can move up pretty quickly to 250-ish because that was the last level of support. So there might be resistance there. All right. So this is where we need patience. And no, it might seem like an eternity if you have money on the line. But it's only been not even 2 weeks. And one of our exit strategy or our stop out strategy was a close below this 235 level. The black line is 235. So what happened? Well, we went into the trade to around 238. It looked like it was going to kind of go lower and maybe we were going to get stopped out for a small loss. But look, it never closed below 235. So if you had if you followed this and, oh, come on, man, there we go. Right. So if you really follow this and said, all right, well, I'm going to buy it, but if it closes below 235, I'm going to puke it out. Well, it didn't close below 235. So you would still be long it. And now it looks like the move we kind of anticipated is happening. We had a big move yesterday. We had a big move today. And kind of just like the Twilio, where would we have our target?
Yeah, I got some calls with the FedEx one. It just seemed like a clear one since we've been covering it for several weeks now.
All right, well, cool, man. Drinks on you next time we go out, right?
Yep.
So yeah, so this is kind of similar to the Twilio. It just didn't happen as fast. But where do I think we would probably have resistance? Well, at this level here, that was support. Remember what we talked about? Buyer's remorse. People buy it here. It goes down and they're like, man, I wish I didn't buy this. This sucks. If I can get out of it at break even, I'm going to. So the people who bought here are going to be placing sell orders here. And that could put some resistance on it. So that's why we picked our price target at 250-ish. And I say ish because it can't be exact. But, if we go back to this Twilio, we picked this price target for the same reason. It was support, right? People bought here, they're remorseful, they want to sell. So got above it a little bit today, but we don't care. We don't care if it keeps going higher. We made a good amount of money in a short period of time. That was a good trade. We don't want to work. This is going to be counterintuitive to a lot of people out there, but we don't want to worry about being right. We want to worry about making money. You're never going to get the exact bottom if you're buying. You're never going to get the exact top if you do it. And if you do, it's just luck. If you're a golfer, right? you're never going to get a hole in one on every par three you play. But if you get the ball close to the hole, you're going to get a good score.
Yeah, that's
So,
reality.
Yeah. So just because it's up a couple more cents today, it's like, well, it's over. 12 is done for now. Maybe it looks like it's going to rip higher tomorrow. I don't want to talk too much about 12 because I don't want people to like think I'm giving an idea. But the idea is like whether you make money or you lose money, when the trade is over, you forget it and you move on. You can't, glory is fleeting, right? A lot of people get ruined because they lose money and they revenge trade. A lot of people get ruined for the opposite reason. They make money and they think they're a genius and they let it go to their heads. And, they think that they can't be beaten. They stop listening they don't listen to the rules, the fundamentals that we talked about.
Right.
And they end up losing. So,
yeah.
It's all psychology. Like being successful can hurt you too. It's just going to take a little bit longer than being not successful.
Yeah,
So
I want to give
an even keel. Keep that in mind.
I want to give a shout out here to David, Jen, and Zani for joining the trading school. Welcome, guys. Let's go. That is why we want you guys to pretty much be interactive, because that is what it is. The best community. Shout out, David. Did you get that, David? If you didn't get it, we'll give you 2. All right. That's what's up, guys. It's definitely, interesting and a lot of education going on. We have to keep in mind here that the lessons are day to day, right? So we are trying to give you as much as we can within the little time that we have here. Obviously, with everything that's going on with the trading school, it's very, very busy. As you know, Mark is always there with the students. So what would you like to discuss, Mark? Is this something related to the trading school, something you're looking at in the markets? FedEx, obviously a big winner. Obviously, we're not going to give them all the trades from the trading school, of course, right?
Yeah, no doubt. I mean, I got to sign off in a few because I got to get ready for tomorrow morning. But I just think the big takeaways are this: one is, like I don't feel I'm not comfortable. I'm not a person who's comfortable self-promoting, but it's like I have a lot of experience, right? I've been around the block a lot of times. I'm not someone who's just joined the game 5 years ago and just wrote a bull market. And then the second thing is we like we've seen here, like this application to the real-time markets. I mean, as far as I know, it doesn't go on anywhere else. So I think experience and real-time application is what makes this class good, or really good.
Absolutely. Yep. Absolutely. Good remarks there, Mark. Well, definitely appreciate your time here. I'm going to stick around here, guys, for a couple more minutes, going over the trading school, going over Benzinga Pro. We might go over some tickers there, so I can show you how it looks in Pro, but definitely appreciate your time here, Mark. And thanks a lot here for the education for the guys.
Okay, cool. And hopefully, if the people that are joining the class, I'll be here tomorrow morning at 7. And our Friday class is like a open class review. We just talk about what's going on in the markets. So I hope to see you tomorrow at 7.
Absolutely. A lot of students.
Thanks, everyone. Here. Have a good night. Thanks, Rodrigo.
Sounds good, Mark. A lot of students here. Definitely, you guys know Mark. You've seen him before. Let me just share something really quick. Okay, so that is the trading school, right? That's what we were going over. That's where all the classes are. That's where all of the education sessions can be found. And in the homepage, you pretty much get the full overview of what's going on, right? So I'm just giving you guys a little walkthrough. You can see the prior classes, the most recent ones. You can see the dates below, so you're organized. The Q&A sessions as well. Those are a lot of people that might not have time to be in the class all day, or for the couple of hours that you have to be there. They just pop in there, look at the Q&A. They go over the material itself, and then you'll be able to get all of the information, even if you're not in the class. And you can see as well the chat rooms, that's where all the trading, that's where we pulled out that FedEx chart, that Twilio chart. That's where all the trades are right here. You can see it says Mark's trade ideas. So that's obviously just, for members there, where you have all the trades, you have all the everything that he's looking at, potential entries and exits and all that stuff. So I'm going to drop the link here in the chat one time for you guys here, and we can go over a couple. I'm going to show you guys Pro in a little bit. We can throw some names there. Okay, so that is the trading school. I'm showing you right now Benzinga Pro. So we're going to go over a couple of things, couple of strategies that I use inside Pro to find trades. Benzinga Pro is included in the trading school. So if you get the trading school, you will get Benzinga Pro. And this is the scanner that we have. It's pretty much full on, like all the trading hours that are available. So it's pre-market, it's open aftermarket, it's open regular hours. It aggregates data as such, and you can filter other things here with that information. So this, if I want to trade pre-market, I just select pre-market there. You can see it selected on the mouse. The period, meaning the movement within a certain period of time. If I want to find something that's moving really quick within the 5-minute time frame, right before the big pop, you can do that as well, right? If you want to do it for the session, you can also select session, and the session is going to be the overall session, right? So if you're in pre-market, or if you are in regular trading hours or aftermarket, and you can also filter it by sector. So, we could do energy and healthcare. So I've been bullish on energy and financials, but right now, they could have a little dip. But healthcare seems very, very good. A good time to get in there. Very undervalued. EVAX right here, 253% gainer. This was pre-market. So this is where you just click on the link, you click on the ticker, and let's just close this scanner here. All I gotta do is click X. So this is this is a daily chart. Looks kind of messy. As you can see, this definitely was good for a trade or two. So you can see the move. All this is, you can look at pre-market. You can look at all this action and scan it before, everybody else can, because everybody else, their scanners, if you're using any of the major brokerage, any brokerage, quite honest, you're only aggregating regular trading hours. You're not able to search, filter, or find trade ideas during pre-market hours. You're just going to see like basic information. This lets you customize it so that you get what you want. You trade what you want. You don't have to trade whatever the market gives you, and that does help a lot of people. So this is the chart, right? Then we click overview, and you have all the basic information of the company. You have a little mini chart there. You have all of the news here. This is where you're going to be able to see price target increases, unusual options activity maybe. You're going to be able to look at all of the breaking news that is happening for the company in that particular, in the details tab. So this is another tab. And these are the insider buys. I kind of went over that. This tab, this is a calendar, and I use this pretty much to organize my week, my month, basically on what's going on in the markets. Yeah, this is all real time, Marion. The trading school that's included, the Benzinga Pro that's included in the trading school is real time, correct? About stocks. This is another workspace. Was just the chart there, but you can have different, different windows in the chart. You also have the squawk. The squawk basically is like an ongoing, I think 7 a.m. to 7 p.m. around those times. And you can either adjust the options one, you have a squawk for options, and you also have a squawk for just equities. And it's basically breaking news in the equities that if there's something happening right now, like breaking news this second, this moment, it will be read out to you. So even if, for example, your screens are tight, you don't have a lot of room on your screens, and you do want to be able to read the market, right? Because you can read the tape, but you can also listen to it. So you're listening to the tape, which does give you, additional flexibility. As a trader myself, I can tell you that I love this tool because I just leave it on and I don't have to be scanning a news feed or anything. It's all verbally, audio given to me. So it helps me focus my eyes on other things and that I'm looking at in trading, either charts and levels or doing something, reading something about a stock. So and that's what it's all about, right? You have to multitask when you're trading, and the easier it can get, the better it is, because it frees up time for other things that are going to help you trading. Simply, you're not just dedicating your entire eyeballs to that one feed, right? The link seems to be working for the trading school. I just tried it right now. Let me click it again. Okay, so yeah, this is the checkout, right? I'm in the checkout. I click the link. You can see the regular price there is 4,000, but with the discount, it's 1297. There's a complimentary laptop as well. There's a 7-day money back guarantee if you guys just want to try it out as well. Trust me, you're not going to regret it. There's a lot of good information, a lot of good exchange of ideas among traders from all over the world, because this is not limited to people just in the US. We have traders from Bangladesh, from Europe, from Africa, from Nigeria, from Romania, Canada, from all over the place. So you have a lot of different traders, and they all come from different backgrounds. Some people have a niche in certain industries and they can apport certain things to the chat. And that's part of the strength of the community, that we all trade together. We all help each other. I think Mark said there was somebody that worked at a port, at one of the ports, and he's in the chat room with us. So he's given us like insight of what is actually happening inside the ports of California. As you know, the bottleneck with the supply chain. So yeah, this is the link, guys. It's still working. It does expire though at midnight. You can see the counter. If you see a laptop there, that means we still have it available. If it's not there, then there's no laptop. Jarrett, if you sign up, do I need to start the class right away, or can I learn at my own time? Yeah, you can learn at your own time. Obviously, I highly encourage you to be there live if you can, because that way you can actually interact with Mark during the live class and have any questions that you have answered, right? Related to the course, related to the education material, related to a stock that you're trading, or a strategy that you're trying to implement or test out. And by the end of this course, you guys will be sharks at trading. I promise you that. And on top of that, you're going to be able to have that experience, right? It's not just the typical retail trading experience. You're trading right next to a former hedge fund manager that managed over $1 billion under Steve Cohen and Jabelli. If you don't know who those people are, look into them. You'll definitely be interested, because Mark Putrino, trading right with them, is your instructor. So as a retail trader myself, I can tell you that I understand the value. I can see the value because I understand the markets to a certain point where I know this is as close to success as you can be, right? SAC fund went for what, a couple tens millions to billions, right? Jabelli, these are legendary investors, right? These are not Reddit traders. If the link is not working, you can just send me an email. I'm going to post the contact in the chat for you. Okay, Contrast is asking if we signed up for the 1 year, what's the lead time on the laptop? So we send you the laptop after day 7. So that's the refund, the money back guarantee period. And after the 7 days, that's when we ship it out to you. We send it as a gift. Daniel, is there a channel on there put on by successful people, as in not living in an apartment? Yep, I'd say so. I mean, definitely Mark Putrino has a lot of experience in the markets, I'd say. He's definitely been around. I would really look up to him for trading education. Somebody that's been doing it, with those kind of funds, to be honest. So yeah, that's been Pro, guys. I showed you a little bit of Pro, a little bit of how I use it to trade. You obviously can customize this as any way as you want, but we're going to be closing the stream here, guys, in a minute or two. I'm just going to leave the links here for you so that if you do want to try it out for the 7-day money back guarantee, at least, right? Trade with a former hedge fund manager, learn with a former hedge fund manager. What's up, KK? Marianne, can you confirm I signed up? KK, I put my email there and the direct line if you want to reach out. I think we've had a couple of interactions here with with you, and it's great because you bring the energy. You're always wanting to learn more. That's great. Marian, let me check. I don't know. Let's see. We had a lot of people sign up right now, so there's a bunch of emails. But you can also email me as well, so we can follow up after the call. Yeah. What are my hours, KK? I mean, I'm 24/7, but obviously right now I'm doing the session. Yeah, sounds good. I'm putting the email there, guys, in the chat, so you guys can email me. The link is there as well in the chat if you do want to join from there. But this was a great session. Mark was amazing. Honestly, like this is typical because this is what we do on a daily basis in the actual trading school. It's not just, yeah, there's education, right? But we're making money as well as traders, which is it's definitely what you want. MRS, I'm putting the link now. Try MRS and let me know. Let me know if it works here in the chat. I just pasted it there on the Zoom call. No, Kevin, it's not a MacBook Pro. It's a Google Chromebook, a new one. So you guys are getting, just for tonight, you're getting the trading school, you're getting Benzinga Pro, you're getting the complimentary laptop, the full year sessions with Mark, office hours, classes Monday to Friday, Q&A sessions, trading chat rooms, learning chat rooms, group sessions. All of the 8 chapters are included as well. And remember, these chapters are they're fluid, right? They're like water. They change because the market changes. So class is not going to be the same as next year's class. So we're going to obviously, everything is live. We don't pre-record anything. Everything is live. We're showing you real life market examples with actual education applied to it. So yes, those are actionable trades as well, because we are going over the education with FedEx. We're going over the education with Twilio, but we're also looking at trade ideas, actionable trade ideas. A video from 2 years ago doesn't help you learn if you're not seeing it in the moment, in the market, being able to ask a question on the spot. And a question you're asking it to a former hedge fund manager, which makes it even better. So education is important, but what's the quality of the education, right? What is the quality of the education? That is what matters. So you are getting the trading school and Benzinga Pro and everything else that I just went over. Mary, we can look at MTTR. What do you want? You want to look at the chart just or what? Or you want to talk about it? Matterport. Yeah. So, I mean, I know Matterport. Actually, I'm long on Matterport. I'm bullish on them. I've been bullish on them. It's on my long-term portfolio. They're in the 3D blueprint design and a couple other more things in real estate. So you got different niches in real estate. Some do good, some do bad. Obviously, a mall is going to perform different from a different type of real estate asset. So having a background in commercial financing, I can tell you that different assets, there's assets, but within the asset, there's different asset categories. And they're all priced different. They all have a different market risk. They all have different revenue models. They're not all the same. Matterport is in the 3D space, so they're not actually building, but they depend on people to build. I'm not 100% sure if their exposure is mostly to residential customers. So, I mean, I'm still bullish on it because of the technology they have. I was literally looking at apartments for a couple of weeks, and the plans have Matterport on them. So this is in Miami, and a lot of real estate developers and a lot of these places that lease apartments and all that stuff, they use Matterport. So that's why I was thinking maybe they're too focused on on residential real estate, which is different from all other types of residential assets. Not residential real estate assets is what I mean. So I'm not very, very bearish on it. I mean, you can see right here that their results for Q3 were worse than expected. But I mean, Snapchat was worse than expected, yet it's still growing at an insanely good rate. But once the analysts get way over their head and they think that a company is going to grow 100% every single quarter, and they keep pricing that in, and then you have the analysts raising the price target, and then if you didn't do what they said, what the analyst said, then your stock tanks. So but that's the market, right? I mean, I'm in it long term, so I'm not really too worried about what happens in one quarter. I'm looking at the overall trend, and the overall trend is that this is going higher. Obviously, there's some resistance here at the top. A lot of buyers that wanted to come out, and any chance they get, they will, right? But if you're long on the company and you believe in the company, real estate, it might go down, but it's always going to be there. There's still a lot of houses to build, and I just don't see this company tanking. The trend really tells me otherwise, and that's kind of what I'm going at after. Not just one quarter that they missed, or not. I mean, you won't even say missed. Didn't meet expectations. If they want to do the metaverse, that's cool. I know a lot of companies are rallying on the metaverse stuff. A lot of companies that I already own are jumping into the metaverse, so it's like a plus, right? Because that multiple hasn't been given to them. So, and now you're going to have a lot of these tech companies, go a lot higher and have higher multiples, and the meta is just beginning, pretty much. So that's what I have to say about MTTR, Mary. Pin, yeah, I took a little loss on Pin as well with calls, K. Honestly, Pin has just been a horrible performer overall. I believe in it long term, but it's just like the chart is not, like it's going to take some time for the market to realize. And I was looking at it at $20, but I was in Snapchat at that point. Yeah, I was looking at it move with Snapchat, but then I noticed that Snapchat was performing better on the charts than Pinterest. And Pinterest even had a good, like 2 earnings ago, had a really good earnings call and everything. But it's like people they just hate it. It's like BlackBerry. It's the favorite stock to short. It's one of those stocks I feel, doesn't get a lot of love at all. Yeah, so it's obviously undervalued. If it's 8, yeah, if it's at 8 for a tech stock, that multiple seems too low. You don't see that too often though in tech stocks. Yeah, I don't know too much about MTTR besides what I just went over. I just know the overall real estate, how it organizes into asset categories and which one they are in. There's not a lot of people in that space, to be honest. And I mean, this looks like a SPAC, to be honest. I don't know. It came out at $10. I don't know if it was a SPAC. I remember about it. I remember, but here we are now. It's up 100% still from when it started here. So it doesn't seem bad to me. Yeah, Pinterest is one that you're going to have to take a look into as well. I still haven't gotten back into there. I'm still in Snapchat, but yeah, I mean, we go over this stuff on a daily basis pretty much. And Mark is there, so all you guys can ask him questions about tickers and all that stuff. But yeah, guys, it's been fun. I appreciate your time. Thanks for tuning in here and being with us in this great what is it, Thursday? Great Thursday here for everybody. Great Thursday for students, for Mark. Great winners on FedEx. I'm out of the trade now. Twilio as well. Cypher made an insane gain on Twilio. So shout out to Cypher, and shout out to all of you guys for being here with us, for taking your education seriously. If you don't do it, nobody else is going to do it for you. So this is my shout out to you guys. Keep learning, keep moving forward, keep putting in the passion for the education in the mornings. Go there in the class, watch the recordings, talk to Mark, talk with people in the trading room about other trade ideas that they have. So get into the community because it's fun, it's exciting, we're learning. A lot of people are making money there on top of just learning. S, the link worked. Awesome. I'm really happy you joined. I have to give you a shout out now, S. Let's go. Let's go. So this community is the tightest community that you're ever going to find. Okay. I've been around the block. I've been trading. Well, as a retail trader, I can tell you that there's nothing out there like this, where you get basically one-on-ones with a former hedge fund manager, and not any hedge fund manager. We're talking about somebody that traded with Jabeli and Cohen. Jabeli, I think his fund's like 32 bill right now. These are legendary investors. These are legends. These are like some of the most profitable traders ever to exist. That is who you want to learn from, not from Reddit boards, not from all these pump and dump chat rooms. You need to follow somebody that knows what they're doing. Definitely. And I'm telling you from experience, don't learn the rough way, because you're going to be down a lot more. And, you know, the psychology of it is just going to be an issue. You know, it's really tough to lose 50%, 100% of your account and then try to win it back, because you're already so, you know, you're already down a certain amount and you really don't even know how you lost it. You didn't really have a plan implemented. So, yeah, the laptop is delivered 7 days after you guys sign up. So I'm going to drop the link here one more time, guys. I'm going to be signing off here in like 1 minute. So if you have any other questions, I'll leave the information there in the chat. Okay, the best time to call me is 9 to 5. Or email. Email is pretty much 24/7. All right, guys. So it's been great. It's been fun here being with you guys. I appreciate your time, and definitely appreciate the effort you put into the education. So we're going to leave it here. Okay. We're going to leave this one here for today. And we're going to be coming back here. Okay. Can't tell you when. It's a surprise. But we're going to be coming back here with Mark as well, and going over all of the education, going over other trades that we are already in from the trading school. And we can take it from there, guys. So thanks for joining here, and we'll see all of you guys out there on the next time. All right. Thanks.